Okay, guys, today we're going to be talking a little bit about what the elevator pitch is. Now, elevator pitch is a term really comes from the marketing or sales arena, where they basically say, like, you've got your client or um, in a situation where you just bumped into them. So this doesn't necessarily have to happen in an elevator. Could be passing in a hallway, in a conference room, out grabbing a cup of coffee. But you see that person who could drastically change your business or career path. And we can approach them in a number of manners. Like it could be this is the new client that we want to make a sale, or this could be that person with our firm that can get us on a better career path. Um, so I would almost use it as an entry place of finding that person who could get you into an analyst program or an internship or something like that as well. All right, so we're going to change this a little bit. We're not going to say you're looking for a job or you're not looking for a sale. You're already hired at the firm, okay, and you're in that tech research position. But you need to get your ideas in front of the people who make a lot of the trades and make a lot of the decisions. So we stepped onto the elevator. So did our boss. Okay. Now we need to make an impression. We need to get noticed. All right. So, what does our elevator pitch need? The first thing you need to get out there is who are you? So, an introduction. Very simple. Keep it very simple. Keep it very sincere. Show some confidence. Okay. Um, so, hey, hi, I'm Jeff. It's very nice to meet you. Like that could be a simple opener. That'll be good in most cases. We can tailor a little bit to the assignment and say, "Oh, great, glad I caught you. My name is Jeff. I'm one of the new tech analysts, by the way." And then you can move into the next phase. Now, the next phase is going to be after you've introduced yourself, show a little bit of your expertise or your background. Okay, why should they be listening to you? All right, so don't go crazy. Just an overview of what you've been doing. So if you're just out of college, you would start it by saying, "Hey, I just graduated from," and name the institution where I studied X, Y, or Z, and make sure that what you studied was appropriate to what you're hoping to get into. So for it's I graduated from Ramsey State University, where I studied Elliott wave theory and traditional technical analysis. So that would be geared towards your profession, and um, and show your expertise in that area. If you've been working though, you're going to want a brief overview of where you just moved from or what you've been doing. So I just moved from to Stacks from where you're doing similar work for Bobby Axelrod at Axe Capital Management. Okay, so relate it to why they should be listening to you. Okay, and show your and brag a little bit, but keep it short and sweet. All right, now the next phase is you got to tap into a need of theirs. All right. So how can you help them? All right. So in this particular case, you could say something like, "I know the firms are looking for new ideas. I got a couple ideas that I think can make us some money. So good. You're in the financial arena. You're in a hedge fund. They need to make money quarter after quarter after quarter. So show that you have some ideas." Now, after you've kind of hooked them a little bit, you're going to make the ask. All right. It's like, can I show you some of the patterns that I've found in a couple sectors? So, and don't go into too much detail in the pitch. Okay. We need the pitch to hook them so that they'll see our presentation. And the presentation is where you're going to have the resources of the charts and the graphs that can back it up, the calculations of the slope of either the uptrend or the downtrend line, depending on whatever pattern you found. Okay. And then last is we're going to close the deal. Okay. So we've made the ask, they've shown some interest. Okay. Let's set a date and time. Okay. All right, great. Let's get this in the calendar. Let's set up a meeting. Let's, what day and time works best for you? Okay. Try to show a little empathy for how busy they're going to be. So try to work around their schedule. Okay. So that's the basics of an elevator pitch. And the thing of it is that kind of makes it a little bit difficult is you got to hold it to 30 seconds. Okay. I'm going to be posting later in the week a couple examples of elevator pitches really geared towards other industries, but it'll give you an idea of what it's supposed to sound like. Okay, so our job again, we're gonna be spotting some patterns somewhere. So I think it's going to be easier to look for patterns in sectors or indexes. Rather than looking at the whole index, we're going to look at exchange traded funds that track to an index. Okay, most of these are already on that spreadsheet that we started the class with. So there'll be some repeats that you might be aware of already, and others I'll explain a little bit of what they are and why I think there might be patterns forming in the future. Patterns may not be there yet, but I do feel like there's going to be shifts in behavior um, uh, in the near future. Okay. Try to look at the short term trend. So when you look at your charts, you're going to see the 3 or 6 months is going to have the little COVID crisis in it. So let's see if we can find a trend coming out of the crisis. But we should look at the 1 to 5 year to see if there was a trend heading into the crisis. Okay. If it was down, okay, does this crisis break the downtrend? If it was up, does this crisis break the downtrend? So we're going to want to look at both those trends, both short and long, to get an idea of direction for the future. Okay, so SPY is an ETF that tracks the S&P 500 index fund. I think we're pretty much aware of that one. We've looked at that. We've charted that a couple times. Um, we we calculated the trend of that was broken in our spreadsheet. But it looks like we're now testing the underbelly of that trend line. So if we get back into the 302 region, it looks like it might run into a little trouble. But if it pushes back above that, it could be like this little blip in the market never happened, which for whatever reason, I in my gut just doubts that. Okay. Now the DIA they call it the diamond, and it tracks to the Dow Jones Industrial Average. So basically, there's only 30 companies in this one, but those 30 companies are 30 of the biggest companies in each of their respective industries. Now, the QQQ is the NASDAQ 100. Your big main players are in that. It's actually bucking the trend because so much of that index is it's skewed to their market weight. So you have behemoths like Amazon, Apple, Google, Facebook, Netflix. As those go, so goes that index. And that's actually been up on the year, or actually since we started the course. Now, the semiconductors, okay, a lot of technology is driven from that as more of the economy needs to be have the computing power to work from home, work remotely. There's going to be more and more demand for their products. Now, XLE Energy has gotten hit very hard. As you can see, the ramp down in energy consumption is not going to be permanent, but in the short term, it took a big hit. Many of the companies in that index or ETF are cash rich and should survive this in some shape or form. But we could have some, I guess, change in trend as far as when everyone notices that smog has been reduced greatly in metropolitan areas, and there might be a desire to keep that in the future. So clean energy might have a little nudge coming out of this. But we still need energy, so oil and natural gas are still drivers of our economy. XLU is the utilities, so that's electric production. It's not a big mover. It's usually a consistent cash producer. It almost moves with bonds. They've sold off recently. If you can't get the yield you were getting in bonds, utilities could be a place to get it there, but it's not without risk. XLF is financials. So you've got your banks, your brokerage firms, your investment asset management places, even insurance companies. In a low interest rate environment, some of their spreads are going to be there, but you can understand there's a huge default risk of businesses in our economy, and the financials will probably shoulder a bulk of that in the future. So it's an area that has the safety net of it. They're supported by the Fed. The Fed will probably step in and bail them out, but they do have a lot of financial headwinds in the future. XLB is materials, and I'm going to talk about materials and industrials. So as the economy starts to open up again, these will ramp up production as we start building new houses, new homes, and things like that. And industrials is your metals and things like that that gets things built. XLP has been pretty stable. It sold off a little bit, but most people are still buying their toiletries. So consumer staples, the demand will be there for the future. Okay, even in this crisis, people won't give up certain things. We're starting to see things like toilet paper return to the shelves, but a lot of people bought months worth of purchases from the future. So it's still in their stores still in storage at their homes as they work through the supply. Then they'll venture back out to the store and start buying again. XLY is consumer discretionary. This discretionary has been hurt since a lot of non-essential businesses are in consumer discretionary. This index is a little skewed because Amazon is within that. So while a lot of the companies, a lot of the stocks in the ETF got crushed, Amazon's gone up, and that skewed a lot of the performance. So this vehicle is not really one that I would want to play unless I could mitigate Amazon's effect on that ETF. Healthcare, of course, is going to be a concern. It's actually slightly positive recently, as many people are going to be paying for healthcare during this crisis. Pharmaceuticals and biotech are kind of together. Now, for me, I don't like holding individual names. That's why I would hold one of these instead. The expense ratio are relatively low for what you could get from these holdings. Pharmaceuticals, of course, are going to be in need. Biotech, definitely. Some of these companies are working on treatments. Some are working on vaccines. It's going to be hit or miss. You've got some companies right now. Moderna, a couple years ago, was trading in the teens, and it skyrocketed to, I think, 87, and has slid back into the 50s. So that, to me, it's a great return, but it's a tough hold. And there's so many more pharmaceutical companies that did not make moves like that. And if Moderna doesn't get stage 2 going, if the trials aren't successful when they increase the number of people that they're going to test on, the stock could crater as a result. Novavax as well is another company that's gone up for, I guess, on speculation that a vaccine, they could get one working. So those are in the pharmaceutical biotech. Now, real estate. I was really looking for commercial real estate. Commercial real estate is one that I think there's a lot of problems in the future. But if they stick to commercial real estate, they're going to be in trouble. But a lot of office buildings, as many businesses are realizing, people can work from home. They won't need as much real estate, and a lot of offices will downsize. If those office buildings retrofit and become condominiums, well, that could be very beneficial to a city that needs housing. All right, solar and wind, these two should benefit from a push to greener energy. As we've seen, the global shutdown has had enormous environmental benefits. I think people will pay a premium to keep some of those benefits in the future. All right, DBA, which is commodities. This is agriculture and as well. So it's a basket. It's a bundle of a bunch of different things. I think commodities have value, although they're kind of a measure of how strong the dollar is, just like gold and silver. So as the dollar goes down in value, gold and silver go up. As people are unsure of the future, okay, and they're uncertain of what's going to happen in the economy. When people are fearful, gold and silver will go up. Okay. If you look around the world, the crisis hit China first, and they've mitigated it. So their index has been reflecting it. So FXI has come back, and it's just slightly negative on the year. India is kind of going through a lot of it right now. They had a very harsh lockdown. Um, Hopefully, they'll see signs of positivity on the other end in the future. And again, huge population, huge chance for growth, but a lot of problems internally that need to get addressed before they can grow. Emerging markets, it's an area we can look at. I need to look a little bit more in depth as to what markets they're focused on right now. Moo is agribusiness, a lot of ripple effect from meat packing to uh, large scale farming. When the restaurants stopped buying their product, a lot of things basically rotted on the vine in the field. So a lot of disruption in this business. They're going to need to change and adapt. So it's just one of the areas that I have my eye on. Now, lithium is something that tracks to lithium prices, and that's in batteries, lithium-ion batteries. The electric car market is basically going to drive this ETF. So as there's more of a push for cleaner and greener, and electric vehicle sales go up, lithium will be in high demand. This one I put in is just something to play around with, as far as this is a trust that owns Bitcoins. So I think this is a more liquid way than downloading a suspicious app and trying to get a Bitcoin safe and whatnot. I lack understanding in a lot of this, so this is the way I would play it. You could buy it on an exchange, or you can actually go to the trust and buy shares. Okay, I'd have to explain that a little bit more, but not on a later video. Now, hack is cybersecurity firms, so Norton, McAfee, things like this, any type of cybersecurity. I think that's going to be huge in the future. It's got huge potential for growth, and I think it's very easy to see the necessity for things like that. iPay is mobile payments. So one of your bigger players in there is PayPal, but you've got Visa and a lot of other Square, other services that are growing in this environment where we're not sure exactly how coronavirus can spread. Cash is a risk. So rather than handing cash from one person to another person, and that goes to another person, mobile payments can enable contactless transactions. Now, in a recession, vices seem to do very well. Okay, so MJ is focused on publicly traded cannabis. Some of the companies that are in this fund, I think, will be out of business because I don't know if they are actually legitimate businesses. Many of the Canadian ones are actually run like a business and seem like a little bit better, but there's been a lot of acquisition within mergers and acquisitions. And when they merge or buy out another company, there's a lot of goodwill that was priced in, which they've sold off tremendously. They've been in a huge downtrend, and it looks like they're trying to punch through and start, or at least end the downtrend. So it's something I'm keeping my eye on. And once again, in economic downturns, vices hold up well. So alcohol, cannabis, tobacco, ACT, also BJK, just kind of like blackjack. That's gaming and casinos and gambling. Now that's different from ESPO, which is video gaming, and esports, which I think is going to be huge as regular sports had to close down. Now PB&J, this is kind of food and drink, so it's got some of your same alcohol beverage companies, but it also has like your Yum brands and your comfort foods. Okay, my other big play, this is a long 20, 30-year play, is domestic and global water. To me, I think water in the future, clean, potable water in the future, is going to be more valuable than oil. And I think more wars will be fought over water than over anything else. So these are some things that you guys can take a look at. Take a look at the graphs. I'm going to be giving you guys more information as the week goes on, of what you can do with that information and how to put your charts and graphs together, and give you guys some pointers on how to present. All right, guys. I will be posting a Google form so that you can put your you can submit your elevator pitch, but really don't submit it until it's nice and clean and polished, and you can do it in 30 seconds.